Welcome into America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates. Securities offered through Peak Brokerage Services, LLC. Advisory services offered through the Retirement Guys Formula, a registered investment advisor. America's Retirement Headquarters, America's Medicare Associates, and the Retirement Guys Formula are separate and independent entities from Peak Brokerage Services, LLC. Thanks for joining us today here on America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan and Scott. My name is Chris Swan. Here's how you reach out to the show, 419-794-3030. That's how you get in touch with America's Retirement Headquarters, 419-794-3030. Or if you prefer, americasretirementheadquarters.com. On today's show, we're going to talk about how long you think you'll live, and do you think you're above average when it comes to investing, and also how to avoid paying extra for Medicare. Before we do that, got to check in. Guys, glad to be with you as always. How are you this weekend?
Doing well. Nolan, welcome back. You know, we had some severe storms here this past week, and I couldn't help but think of you. You're out in Pioneer, Ohio, doing a camping trip with Boy Scouts. How did that go during the storms?
Yeah, it fits really well with today's topic. And, you know, later on, we're going to talk about how long do you think you'll live? And I would say I was in a hammock, and at 3:30 at night on Sunday, just a week or so ago, it was coming down pretty good in there. And it would not be camping. It would not be the Boy Scouts of America trip if it was not severe weather. That's part of the perseverance that they teach us, I guess. We had a great time, though. Good to be back and good to be with everybody here today.
Absolutely. It's been a while since I've been a Boy Scout, but I do remember those trips were hardly ever sunny and 75 for the entirety of the trip. And it's the same sort of thing when it comes to retirement planning. You know, there's going to be those sunny days. Sure, that's what you hope for. There's going to be those rainy days, and you need to plan for those as well. And that's kind of what we want to get you prepared for here on the show. So let's dive in. When the market is doing well, like it is now, do you tend to get a little bit complacent? An NYU finance professor told Business Insider, investors have actually become, quote, sloppy and lazy. He said people think that making money is easy, and he warned that, well, markets have a pretty easy way of fixing that kind of thing. Guys, is it dangerous to assume that investing in the markets is always the best way to go?
It really is, and I can't stress enough. I know we've talked about it on the past couple of shows, and of course, if you missed any of those, we talked about how to invest with inflation rising, how to invest with, you know, the interest rates increasing, and, you know, giving you specific tips and advice. But if you think about the stock market, it's pretty simple, pretty basic. Buy low, sell high. We're at or near all-time record highs in a lot of the categories. It's a very good time to take a look at your portfolio, you know, figure out where you need to be doing some rebalancing and where you need to, you know, maybe take some profits and trim back a little bit on some of the areas. It's the things that we're doing, you know, within our models, our portfolios. You know, I'll give you a couple of examples of why it's important to make a change now, because things can turn in a big hurry. You know, unless you've lived on a deserted island, which I'm doing in July coming up here with the Scouts, you've seen, you know, the explosion in some of the digital currency stocks that are out there. And the most popular one that is out there is called Bitcoin. Back on April 15th, Bitcoin traded at $63,237 for one Bitcoin. And as of June 23rd, 2021, Bitcoin was at $33,594. Wow. You know, so it's easy to get caught up in the excitement of what's happening and say, I want to jump on that because it's going to continue on. But, you know, had you been that unlucky investor in literally 2 months time frame, you lost 47% of your money. If you look at the real estate market, what's happening right now here in Northwest Ohio, and I think it's an industry trend across the United States, is, you know, houses are selling for extreme valuations, right, and pretty darn fast. I mean, people are offering way over asking price, and they're actually losing out because other people are offering way over asking price.
Yeah, absolutely.
You know, those are the type of things that get you into trouble, and, you know, within the stock market, it can get you into trouble too. And I think part of it is taking into consideration your time frame. You know, as America's Retirement Headquarters, home of the Retirement Guys, we really tend to focus on those folks that are close to or in retirement time. So, folks, if you're within 5 years of retiring, or if you just retired, pay special attention. if a lion's share of your money is invested into the market and it's subject to market risk, while the market is at record highs, now may be one of the best times ever to get yourself in a position to be able to have a backup plan, be able to have a contingency plan if and when things go down. There's a lot of rules and sayings that are in our industry, and one of them is you can't fight the Fed. So short term, the markets have been very cooperative. They like the quantitative easing. They like the fact that the government is dumping trillions and trillions of dollars on the economy, which is boosting the markets. But again, at some point, that wheel on the bus has to fall off. And, what you don't want to be is you don't want to be the last one left to the party. It was Dr. Robert Shiller, who is also somebody that we follow a lot too, because he won the Nobel Prize in economics for his ability to predict, the markets and their prices. And, he's saying that the markets are at the second highest valuation really in hundreds of years of where the prices are at right now. But he also goes on to say that even overweight people sometimes live to be 100. So again, I'm not telling you that tomorrow the market's going to crash. I'm just saying now that the market is at an all-time high, don't be the person who, as you pointed out, Chris, in the quote from Business Insider, who is sloppy and lazy in this market and thinking that it's always easy to make money within the market. You've got to be careful of some of those time bombs that are out there. If you have a long-term time frame, and even if you're close to or in retirement time, you still have a long-term time frame. So, when you're thinking about your money that's not going to be needed for, 10 years or longer, equities can make a ton of sense. It still can be a great part of your portfolio. You got to really know what you own and, the reasons why you own it too. When you're looking at your portfolio, a lot of people, I think, don't understand truly what they own within their investments. They just look at their statements and see things are doing well. But now is also, I think, a very important time to take some time to really understand what are the holdings within your investments. I mean, do you own restaurants, which I feel is maybe a little bit dangerous, or do you own energy, which is obviously under attack in certain categories from this administration, or construction, which is maybe a strong area. It could be a strong area for a while, as a lot of builders continue to build out products. So it is an area you have to pay special attention to. If you don't know what your risk level is and you don't know, Nolan, what area should I trim back within my portfolio, that's where we're here to help. One of the best things you can do is take and get an independent portfolio analysis done. Take a look at the risk in the portfolio. One of the softwares that we love and we talk about is called Riskalyze. You can check it out online at riskalyze.com, or if you want to have our office, we can put it in there because we already subscribe to that software program and do a portfolio analysis for you and help you make sure that you don't get hurt if and when things change in a hurry. And folks, just remember what I said. Bitcoin is a perfect example, and just recently this year, in just over 2 months, it went down by 47%. If you can't have that happen to your retirement account, if you could not afford something bad like that happening, you really need to take a look at it and not get lazy in this market.
Yeah, from what I recall reading, Bitcoin, just what happened in the past week, wiped out the gains essentially for the entire year, not just the 47%, anything from January 1st back to square one. I, not being in the industry, of course, I'm going to make two references to quotes that probably you guys don't use as often. The first one is going to be from the late, great Kenny Rogers, the gambler. You got to know when to hold them. You got to know when to fold them. Yep. Now, when we're at the top, this may be a good time to go ahead and, know when to walk away. Not necessarily run, but start developing that strategy to maybe take some of those winnings off the table and develop a strategy for whenever the next market downturn or whenever the next quote-unquote disaster strikes. And that's where the second quote comes in from the greatest philosopher of all time, and that is Mike Tyson. Everyone has a plan until they get punched in the mouth. I think a lot of people out there, last year, not even 16 months removed, last March, a lot of us got punched in the mouth, maybe found out that we had more risk in our portfolios than we thought. Thankfully, it bounced back pretty quickly and we're able to recover and, see these near all-time highs that we're seeing right now. But what happens next time? Do you have a plan aside from getting punched in the mouth? That's where the retirement guys come into play. 419-794-3030. is how you give a call, start setting up that plan, develop that individual portfolio analysis, 419-794-3030, or go online to americasretirementheadquarters.com. A New York University study found that most people rate their own driving skills as, quote, above average. Well, there's a problem with that, of course, because It's impossible for all of us to be above average. Some have to be below average. That's how averages work. But that brings me to the point here. People also assume they can do an above average job of planning for retirement without any help from a professional. We've talked about this before, why you should have a professional, but let's talk about why this kind of mindset is generally not a good idea.
Everybody on the road thinks they're a great driver. I run into them every day, and road rage is a real thing, people. I will tell you that. Road rage is real. Nolan, I've met people that come in, and when I do their Medicare, I talk to them about their investments. And a lot of times I get, well, I'm good. I can kind of handle it myself. I manage this myself, and I've been doing quite well in that. And I think a lot of times, it's kind of like what you said earlier. I met with a new client actually last week, and I asked them about their investments and if they were happy, and she's retiring. And she says, well, you know what? I've got this 401k account. I have no idea who it's with. I think it's with this company, but I don't know. They moved it to that company. I mean, she had no idea what she had. And I think a lot of times the people out there that think they can do this on their own might be missing out on some of the finer details and things that happen with financial planning. I know me, for one, I might be able to look at some of the different funds in my portfolio and say, yeah, I could do this, that, or the other. I'm closer to the business than a lot of people out there are, and I don't know what I'm doing. And that's where, if financial advisors like yourselves, I think that's important.
Well, I think, another good example of driving is my oldest son, now 18. When he was 16, I took him out to the Bondurant School of Racing. And, one of the things that's extremely helpful is as you're learning and developing those skills, it's nice to have somebody in the passenger seat, give you some coaching and guidance and say, hey, you got to slow it down here or pull it in there or back off here or gun it there. That's the way to take a look at it. If you're listening and you're looking at your portfolio and you're thinking, we're doing great, our investments are perfect, and, things are going well, what I would encourage you to do is, again, going back to the independent portfolio analysis, another good tool to use is Morningstar. Again, it's a free website, morningstar.com. What you can go and do over there is if you take and you put in your mutual fund symbol, what Morningstar will do is, first and foremost, it'll give you a star rating. With 5 being the best. 5 stars is the best, according to Morningstar. And then it'll also show you how your investment is doing versus the benchmark. Are you in the top percentile? Are you average, or are you below average? Then you want to develop some type of time frame. I mean, don't worry about what happened maybe this month or, even this year. But what you want to do is you want to look for the consistent trend. So if you are investing and you're paying somebody for that, wouldn't it make sense that you want to consistently be at least a little bit above average? Mm-hmm. And the only way to do that is, again, use a website like Morningstar where you can do a portfolio analysis. So a lot of times when people come to the office, what we do is we take their investments, we can put it in Morningstar, and we can do a printout. And then I go back to like schools. Let's just say C is the average grade.
Yeah.
And, if we do the printouts, then we can give you those printouts and you can take a look at them and you can grade your own investments and determine whether they're C students or B's or A's and D's and F's. And if you have some D's and F's inside of there, maybe those are some of the areas that you want to take a look at making some changes. So again, just a few minutes ago, I was talking about maybe there's some areas to pull back risk. Well, if you wanted to pull back risk, maybe the D's and F's, if you do have any in your portfolio, or if there are any of those below averages, maybe that makes it even a little bit easier to figure out how to rebalance your portfolio in today's market. But it is easy to think that things are going good and feel that you're above average when the markets are doing good.
Yeah, just by looking at your balance statement and seeing like, oh my gosh, look, and I'm up another, X number of dollars this month. Then you look at it again and you get your quarterly statement. It's like, wow, I'm up there. That's not necessarily the entire picture that you need to be looking at.
Yeah, I would agree. I mean, if you're taking the same level of risk, again, you've got to compare apples to apples. If you're up, say, 5%, but everybody else who's taking the same level of risk is up 10%, is that really good? And, you, the account owner, will ultimately be the decider of that factor, but we'll help you get those answers, and that's absolutely things that we can do to help you out.
It's pretty easy to say that you've got a good retirement strategy. Even if you do have these C or D investments, when the market is doing really well, you're still making money. But it's better to know that these are C and D plans or decisions that you're making now while things are going well than when things are doing the opposite. When like we said earlier, when you get punched in the mouth and then you find out all the flaws and all the holes in your plan, and it all really kind of comes apart. It's better, again, like going back to the first question, to go ahead and develop that strategy now. Go ahead and figure out what to do when the time comes, when the market does take that downturn. How am I going to be set up? And again, probably not something you want to do on your own, just a little bit of 2 cents there. Pick up the phone, give a call, schedule a time to speak with America's Retirement Headquarters, 419-794-3030, or go online just to americasretirementheadquarters.com. You can schedule a time there as well. Did you know that you could unintentionally end up paying more for Medicare than you have to? We're going to have that conversation when we come back from the break.
You got to know when to hold up, know when to...
Sifting through your closet in the morning, do you ever wonder,
Barb, which collar looks better, the blue one or the white one?
They're both about the same, aren't they?
The team at America's Retirement Headquarters thinks so. In fact, they're exactly the same. When it comes to your retirement, it doesn't matter whether you wore a blue collar or white collar to work. What matters is that you're prepared to enjoy the retirement you've always dreamed of. Whether it's developing lifetime income, what to do about Social Security, even protecting your savings against an unpredictable market, America's Retirement Headquarters can help you develop a retirement strategy designed to suit your individual needs. Call 419-794-3030. That's 419-794-3030. The color of your shirt? Well, that's entirely up to you.
That ain't working, that's the way you do it. Money for nothing and your chicks for free.
It was their biggest hit. Dire Straits released Money for Nothing. This week back in 1985, lead singer Mark Knopfler wrote the song after he found himself standing next to a delivery guy in front of a bank of TVs in an appliance store. He says many of the lyrics were actually taken word for word from the guy, making fun of the videos that were playing on MTV. That's right, MTV used to play music videos. What a novel concept. Welcome back to America's Retirement Headquarters, home of the Retirement Guys formula, 419-794-3030. 419-794-3030, and americasretirementheadquarters.com. Not just the Retirement Guys formula, also America's Medicare Associates, and that ties us into this question here. Poor planning can sabotage your retirement, and that includes your health care. For example, MarketWatch warns that decisions you make around the age of 63 are going to determine how much you have to pay for your Medicare Part B premiums. How does that work, guys?
Well, that's a great point. In fact, I had a client in, a new prospective client in last week, and his income was in excess of $250,000, and he's turning 65. He's saying, so what am I looking at cost-wise? Because I have an employer-sponsored plan right now, and I know about what they're paying for my health care. What am I going to be paying? One of the things that is you have to be aware of when you're determining whether or not to choose Medicare is how much is Medicare Part B going to cost you? Mm-hmm. Because Medicare Part A is free. If you qualify, you've got 40 credit hours, which is equivalent of 10 years. Part A is hospitalization, that's free. But Part B is where your expenses are going to come into play, and that's where you pay a premium. So I've got a little chart here. Then I want to get into a couple of things that you need to be prepared for if you're thinking and contemplating retiring and taking some monies from your investments. What happens with Social Security and Medicare determining how much you're going to pay for the Medicare Part B premium is they go back to your 2 years prior tax return. So, for example, for 2021, they're looking at 2019's earnings. If you are an individual tax filer filing $88,000 or less, or joint husband and wife filing $176,000 or less, which is where 70% of the people that are taking Medicare fall under right now, your premium is going to be $148.50 a month for 2021. But this chart goes along. If you're between 176 and 222 for a married couple, it goes up to 207.90. 222 to 276 is 297. 330 to 750 is $475 a month for just Part B. If you have an employer-sponsored plan and you're not paying that amount of money, keep your employer plan. But once you are off of that plan, you can anticipate paying these premiums. Now, along with Part B premiums, Part D premiums will go up as well. So, for example, $12.30 if you make 176 to 222, And if you look at up to 750, you're going to be paying $70.70 a month higher for Part B. So if you add those two together, you're going to be paying close to $550 if you're in that top earnings bracket. So one of the things you want to really be aware of and pay attention to is if you're contemplating retiring, in which a lot of people are, you're 62 years old, you're thinking, okay, I've got another 3 years to work here. I've got ownership in a business I'm looking to maybe sell, converting a traditional IRA over to maybe a Roth IRA. All of these items are going to increase your income. So you want to make sure that you're thinking about that and doing those conversions prior to 63 years old. Because remember, at 63, they look at 2 years prior tax returns for determining your Part B premium. Things to think about, and that's why, like we were talking in the prior segment, a financial advisor, myself, we're going to be able to walk you through the advantages and disadvantages of signing up for Medicare and even taking, distribution. Let's say that you wanted to go on that dream vacation, that month-long cruise to Alaska, and you're going to take $50,000, and that's going to put you into that next threshold. There may be ways to take that money without increasing your income.
Another perfect example where this catches people off guard. Back to our example when we were talking in the first segment, it's good to have a professional driver sitting in the passenger seat.
Absolutely.
What I see oftentimes, Scott, is a lot of people are looking at maybe paying off their mortgage right when they retire.
Mm-hmm.
They don't want to go into retirement time and have a mortgage. As a financial advisor, looking at it from a cash flow perspective, I think being debt-free is a great thing.
Sure.
Right.
But, they get that surprise, when they find out that they end up owing a bunch more in their healthcare cost.
Absolutely. I read an article earlier today, and one of the people in the article said, I've made more money during retirement, and they were in their 70s, and their portfolios are performing extremely well, and now their RMDs are kicking in, and now, because of that, their income is increasing, and their Medicare Part B premiums are increasing, and it's upwards to $5,000 to $7,000 more that they're going to be paying because their income bracket went from one threshold to another. So those are all things you really, really need to pay attention to. If you're 62 years old, you're contemplating, planning to retire and getting your, ducks in a row, so to speak, look at maybe making those sales, making those distributions, conversions. Roth conversions are great with tax. We talked about that before. With the taxes the way they are right now, it's great to do a Roth conversion now. That will count as income, which could push you over a different threshold, and you would be paying more out of your pocket.
It's a good idea, even if you're before the age 65, prior to Medicare. What you pay for the affordable health care is going to be
absolutely
driven upon your income. And, you may be listening to the show and you're thinking, guys, I'm not going to retire for 5 or 10 years from now. And that's okay. That's maybe your plan today. But, what we actually have been doing a lot recently is working with a couple of companies locally that have been offering early retirement buyouts. Mm-hmm. So it doesn't hurt to get your ducks in a row, even to know that information and have your game plan ready to go, even if you don't need to execute it. It's like running the fire safety drill. So we're happy to kind of run you down that path and give you some guidance and, help you think about things in case something like an early retirement buyout gets offered to you. It's not as an emotional, concerning, stressful situation. You already get your game plan ready to go.
Goes back to what we say very often on the show. It's never really too early to start planning for your retirement, whether it is something that is placed into your lap early or you finally decide, I just want to go ahead and retire early. If you don't decide to retire early and you want to continue working, you just have more time to do these Roth conversions. There are more things that you can do to be more advantageous towards retirement. But remember, when it comes to Medicare, there's a 2-year look back, and you could unwittingly be tripling your Medicare premiums. You can call it the Medicare Platinum plan if that makes you feel better, but the benefit's not going to change. The actual benefits you get aren't going to change at all. But again, to get those ducks in a row, to start developing that plan, regardless of where you are on the road to retirement, 419-794-3030, or go online to americasretirementheadquarters.com. So if you guys had a guess right now, how long do you think you're going to live? Well, according to the annual Retirement Readiness Survey, the average American expects to live to the age of 84, but actuaries say that 65-year-olds, about a third of them, are going to live to the age of 90. So there's a 6-year difference there. How do we account for that unknown variable? Because no one really knows when it comes to our retirement planning.
No, you have no idea. In fact, one of the things that we always talk about is look at your genetics for one. I mean, that's one way to kind of get an idea on it. But we don't have a crystal ball. We don't know when that's going to happen. It could happen anytime. And one of the things that I guess we would say is plan on living, don't plan on dying. I mean, that's the easiest way to say it. You know, we just don't know. It definitely is going to impact your investments. It's going to impact, your retirement life. Don't be one of those people that sit back and with the fear of, oh my gosh, I'm going to die tomorrow, so I don't want to do anything. I don't want to leave the house. I want to do any of that stuff. Just, you know what? Enjoy life, because tomorrow's not guaranteed.
Having a plan that accounts for longevity in your life is akin to kind of having that fire extinguisher in your house. You'll be grateful for it if the time comes. If it sounds weird to say longevity risk, but if you do live a long time, it's better to have a plan that's going to account for that, where you don't have to worry about that number one fear among retirees, and that's running out of money. That is something the retirement guys can help you with at America's Retirement Headquarters. To get started, 419-794-3030. You can always find them online as well, americasretirementheadquarters.com. We want to thank you so much for joining us on this week's show, as we always do. Truly grateful for it. Again, one last time, the number 419-794-3030. And Nolan, Scott, as we wrap up, I want to leave you with the final word.
Benjamin Franklin said, an investment in knowledge pays the best interest. Have a great week, folks. We'll see you soon.
America's Retirement Headquarters is located at 1700 Woodlands Drive in Maumee, Ohio. You can reach them by calling 419-794-3030 or online at americasretirementheadquarters.com. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments can fluctuate, and when redeemed may be worth more or less than when originally invested. Nolan Baker is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Please consult with your attorney, accountant, and/or tax advisor for advice concerning your particular circumstances. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Nolan Baker, Ohio Insurance License Number 27787.